And we have a very special guest joining us, Ajay Shrivastava. He's a regular on the channel, has been so for the last 9 years, and he's taken our time as well to be part of our programming this afternoon. Ajay, firstly I have to say thank you to you for joining us today. Then I have to apologize to you for keeping you waiting. We had a long conversation with the Tata Steel management. They come very rarely on the channel, and I'm sure you heard a lot of what he had to say about the ThyssenKrupp joint venture. And lastly, I just have to tell you that welcome to the show. Thanks very much for joining us. Give us your assessment of how you look at the markets right now, given that we're in the last wheel of the session today.
No, I think the market is nicely holding up. If you ask me personally, it's done better than what one can expect it to be. It's nice, it's stable, little bit of correction, gives opportunities. Some stocks have gone up, some have gone down. I think you can't expect better than this from a market which has been on the roll for the last week or so, which was facing a serious wall of misery, which has seen already huge outflows on the FPIs. And we're seeing a huge interest rate rise in the system where FD rates are now going up. And if you have not noticed it, for a change, every bank is marketing FDs. They are chasing you and saying, get us the FDs. So I think environment has changed a lot, but I think market holding steady, it's very good. And I think, if I'm not wrong, you are commemorating your 9th year. Is that so?
It's 9 years since ET Now launched. And like I said, Ajay, you've been part of the journey. So it's so nice. It's so special. We are actually delighted to have you today to speak about the markets with our viewers.
You know, more than the market, I think from a third party, I can tell you one thing extremely good about you guys. One is, I think investors in India owe a lot to a channel like you, because I think you held the nerve of investors just at the right time when there was complete panic. I think come morning and you hold the hand, you hold the nerve, and you say, listen, things are not so bad. Investors go back a little bit assured. The coverage has been unbiased to a large extent. I think, you know, a lot goes into making this equity system work. And one of the key things is what's the media communicating. And I think it's so different. I'm saying your channel and other, it's so different than what we see on mainstream media. It's amazing. It's so positive. It holds people, informs them. So I think you guys have done a tremendous job. And if equity culture has gone up, it's thanks to you guys giving us and all the readers and all the investors such a good outlook on the market. And as I said again, hold the investor's hand, not panic him at the wrong times.
Cheers to that, Ajay. Are we still buying USL?
You know, well, you cannot take away personal favorites. Okay, so long marriages and long associations are part of the game. Ask anybody who's bought HDFC Bank, ask anybody. Most of my friends are married for longer periods than average American standard. So we are a bunch of loyal people, you know, good or bad, we are loyal.
Yeah, indeed, as you are to ET Now. Okay, no, USL was just on the sidelines. But what else, or rather, Ajay, what is it that you've bought in this correction? Any new theme which has looked attractive? Anything which has come down to my mouth-watering valuations?
Well, you know, mouth-watering we'll know when we exit the stocks. I think one big loading up which took place in the last meltdown was some of the mid-cap infrastructure stocks. I think they corrected quite sharply. Some have come back, some have not so come back. So I think that was a long, big purchase that I think happened. One or two banks which we had not bought earlier, we placed a large bets on those banks, I think, which are all large cap banks. So, consumer companies remain the favorite of the day. Little bit of nibbling in pharma, I'll be honest to say, not too much, but yes, top 3 pharma names are back in the portfolio in the last 2 months or so. So I think this is roughly what has been this thing. And I think, you know, again, the key is don't fiddle with your portfolio for too long, because the winners of last year are winners of this year. If you look at Page, if you look at iShares, if you look at HDFC Bank, if you look at Kotak Bank, they gave you phenomenal return last year, they're giving you phenomenal returns today. All the guys who died last year are dying again today. So this is not a market where you need to do anything seriously stupid to churn it around. Stay put with your good quality stocks of last year, and I think you'll get a decent return in this market without having to stay up late night to see what's happening to the US market, it's up or down.
Ajay, you just heard you know, the Tata Steel management talk at length. I think this has been one of their most comprehensive conversations in between numbers, where they've highlighted how the business is looking in India, how is it looking globally, where do things stack up in the commodity cycle, the ThyssenKrupp JV, as well as the Bhushan Steel acquisition. They've covered the entire range actually. What did you take away from the interview? And for an integrated play like Tata Steel, do you think that there is more upside to the commodity upcycle that we are seeing? A major chunk of the gains have already been made. Is there more to go?
I think there's more to those, but having said that, I think commodity cycle doesn't die out in such a period. You just certainly had a dollar appreciation, so you'll see some bit of a correction in the commodity stocks. But I think the key is, would you like to invest in a Tata stock with this kind of a production outlook? I don't think so. If you look at the returns we made from Tata stocks, leave aside a few, a TCS or a Tata Elxsi, as a name, you don't see equity returns. So, you may like the theory, you may like the scheme, you may like all the nice explanations, but will investors ever make money? That's a key question. Will they change so much? Will the costing change? Will they be able to generate superior returns? And that's the difficult call, because that's a group which has not given serious equity returns to anybody. So commodity cycle, I think you still got a lot to go. You may play Jindal more in Tata's, if you ask me, on value creation and shareholder value than a Tata Steel. They have done a better job in creating shareholder value. You saw even the other company, the group company Jindal Steel, went down drastically. They charged back. They've done a phenomenal job to come back into market. So I'm saying, even if you believe in the commodity cycle, which we believe in, you do not need to necessarily go with a Tata Steel kind of stock, because others, I think, will do a lot better if the same cycle continues.
Ajay, what to do with IT pharma? I mean, IT stocks have made the return 35 odd % in a year. Pharma has done that in 4 days.
I think pharma definitely keep it going. I don't see a reason to sell it. Same as IT. I think IT stocks are there for the two reasons. One, of course, the returns were because it was under-owned dramatically. So when people rush in, you know what happens every time it happens. But I think the key story emerging there is what has happened in the US. It's the buyback story. You had the Cognizant buyback, you had this buyback, you'll have Infosys, you'll have Wipro. The cash flows are humongous. Their asset requirements are marginal. In fact, their net, they're hardly investing any serious money back compared to the depreciation at this point of time. So in which case, the money is going to start rolling on to the shareholder. The activity pressure is huge. So I think you got a story building there of huge free cash flows, decent growth rate, nothing extraordinary, but decent. But the good part is money flowing back to the shareholders, which I think is a tremendous story. That's what US equity market was built on. That's what Indian IT is not showing. And I think pharma is about to follow that path. They will start to build value. You need to buy back shares. You need to go buy backs, because pharma shares are undervalued compared to a sale value, asset value, market value, whichever metrics you use. They are underpriced today, pharma stocks. So if they sell to a PE fund, they'll get double the returns price what they make today. So it's going to be a story of buybacks. It's going to be a story of steady returns. And rupee being at 68, 69 gives you a lot of leeway, because give it a year, the old future contracts are going to expire. The new future contracts, which are at 70 plus 71, will start to kick in the returns. So you may not see, there will be a hiatus of 6 to 8 months because this transfer of these futures in terms of foreign exchange. But I think give it a year, the big chunk of earnings will start to roll out. As these contracts expire, the new ones start to kick in. So keep it rolling. Do not worry. This is a good buyback game. This is a good cash flow game. This is a good game with zero debt in a rising interest rate scenario. Don't go anywhere.
Ajay, we just have about just under 5 minutes to go before we start wrapping up the markets. Two specific names, since you're very big on the turnaround stories, L&T and ITC. And how do you classify them as turnaround? I think they've gone through an earnings lull, but could you just explain a little bit more on what kind of upside do you see in their earnings profile, in their profit profile, that makes you believe that they would be turnaround candidates?
Okay, say L&T, it's the largest company in the country. It's made poor returns for shareholders. That's the honest answer. And the reason being, not because the businesses are bad, the reason being, wherever business was incubated by L&T outside its corporate umbrella, it did tremendously well. Look at L&T Infotech, fantastic. Look at L&T Finance, decent. The problem is L&T itself, and that's the problem of leadership. It runs, say it at ITC, such a beautiful parallels. Two companies, tremendous value in them, strained by the poor leadership. Take out the two chairmen, now a non-executive chairman or whatever it is, put a new management there which is independent of them, and you see this share stock flying, absolute flying. This and ICICI Bank are the trio which can take the index up dramatically. If there is a management change at the top, you will see these stocks flying. So I think it's not about earning dynamics. They will get the defense contracts. L&T is the largest in defense in the country. Whether we like it or not, they're the only ones who can get it first. So you got large defense, large civil infrastructure. You can't, and you got a breakup value of L&T Infotech, on the L&T Finance, etc. What more do you want? Same for ITC, super cash flows wasted away by this management trying to pursue a dream of FMCG which has no returns to shareholders. So wait a while. It's not a business story, it's a leadership story. 3 companies, 3 leadership change, phenomenal value will be unleashed.
Okay, Ajay, would have loved to chat a lot more, but have to let you go. Thank you so much for being part of our 9th anniversary.
Thank you. Congratulations.
Thanks. Okay, that's the word from Ajay Shrivastava.